Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. This is week 2 of 2016, the Forex market review. Today we're going to do the session slightly different today. Normally we would be jumping onto the daily FX website and looking at the upcoming news events. But this week you may have noticed by the Twitter feed, or if you've looked at the daily FX website yourself, that there's not really a lot of high importance news occurring early part of this week, with the first bit of the news coming about Thursday in the Australian Eastern States time. So what we're going to do is take a look at a new software tool. It's actually been around for a while. I've been using it myself, and there's been a lot of good reviews on this software tool from my affiliated partner. And this is where the software tool comes from, and it's called the Dynamic Support and Resistance Tool. And we're going to have a look at it on our charts today and just see how this tool could benefit you and all the others during your trading session to identify support and resistance areas, which we normally do with our charts. If you ever want to have a look at the tool yourself, have a bit of a description, look at a bit of a review, then please, or even take a look at purchasing it, then you need to visit our website at www.saneinvestmentsolutions.com and then go ahead to the training course section. And then when you click on the training course section, drop down to the Dsr Indicator and then click on that one, and it will bring you to our affiliated partners website. And here you'll find all the information about the Dynamic Support and Resistance Indicator. As you can see off the website, it works on multiple markets. The Dsi Indicator can be used in trading the Forex, futures and stocks. It can be used on multiple time frames, and the Dsr Indicators are, as described in this picture, it's showing support and resistance areas, support being in green, resistance being in red. And normally when we look left on our charts to identify support and resistance areas, this appears for you automatically, placing it depending on what time frame you have it set for. So as it's indicated, it appears on multiple time frames and you can set it on, and I currently use mine on the daily time frame because my trading rules are based on a daily chart. However, you can put that on a 4-hour chart, a 1-hour chart, 15-minute chart, weekly chart. Doesn't matter, you just change the time frame to suit your needs. It can be used for multiple methods. So if you're trading in a trend continuation or counter trend model, then this tool works for you, and it will show you where the support and resistance areas are. And it can also use on multiple platforms. I currently use it on the MetaTrader 4 platform, but you can also use it on the NinjaTrader platform. So what we're going to do now, we're going to jump across to the charts. We're going to review the pound, yen and the USD yen. Also look at the Aussie 200 and the US 30, just to go and have a look to see what's happened in the market the past week. And if you're not already aware, the stock market's had a bit of a pullback or decline over the past week, and just how that affects pairs such as the USD yen and the pound yen. When the stock market falls, the pound will fall and the US dollar will fall in relation to the yen, where the yen increases in value. And that's because when the stock markets fall, people want to jump to a safe haven currency, and the yen being a safe haven currency, you'll see that strengthen during times of crisis when the stock market's falling. So here we have is the Aussie 200 on a daily time frame. And as you can see, in the past week, we've seen a decline in the market. And what I've done is currently just dropped in 2 horizontal support areas. And support, as we've mentioned in the past, support is like the floor. So when the market comes back down and tests this area where it's looked left previously has bounced, that's called a support area or the floor of a house. And when it tries to go up for the first time and break through, that's called the roof, and it's trying to break through the resistance areas. So that's how we identify support and resistance. Now if we look at the last week, which is this area here, we've seen a bit of a pullback in the Aussie 200 market, and now we have the stochastic in the oversold area. So this is indicating to us that there's likely to be a bounce around this area, with the stochastic being oversold and the currency coming down to roughly some support areas. So there's no reason that it will bounce from this area. We have seen a minor bounce at this stage, so please don't jump in and go ahead and buy this. It's just a indicator that it likely could reverse at these levels, and we need to trade it based on our own personal trading plan and rules, and there's no recommendations that I offer on these videos. If you were to jump to a weekly time frame, you can see that these support and resistance areas easily match up with the weekly time frame chart. So not only is it a daily support area, it's also a weekly support area. So that just gives us a bit more of a stronger view that it could bounce higher at this stage. We're now looking at the US 30 on a daily chart as well. And as you can see, I've already pre-dropped in the support and resistance areas, just roughly where they've bounced a few times on the daily time frame. Again, in the same time frame, we've seen a decline in the US 30 market, and generally you'll probably see most stock markets react the same. It all depends what's happening with each country, but generally if one's falling, the others will be falling at the same time. We have the stochastic in the oversold area, so this is giving us an indicator that it's likely to bounce off these levels and go back higher. And because it's coming down to a support area on the daily time frame, this could be happening, and we have seen in the last couple of days that it has a bit of a bounce higher. But we must look here and say, well, there's a resistance area where it was previously support, now becomes resistance, so it could struggle to break through these levels and before falling lower, or it could just punch straight through. If we jump to a weekly time frame, we can see that on a weekly chart it also matches with a weekly support and resistance areas. So this also gives us an indicator that the market is probably likely to stabilize around this area, have a bit of a breather and push back higher. With the weekly stochastic also being in the oversold area, it's likely we could see a move higher, but we do want to review our own trading strategies and look for our own personal entries on the market. Now let's take a look at the pound yen. So here we have the pound yen on the daily time frame, and what we've seen is the market has been falling over for the last few weeks. It actually started its decline all the way up here, and as you can see, this is roughly around the 19th of November in 2015. We've had a bit of a pullback. Now if we want to see how far this is likely to pull back, what we do, we just grab our Fibonacci expansion tool, and we just go and put it from the roughly the recent highs to recent lows back to the recent highs again. And as you can see, this is a 100% level, and this is the first area. Here it would likely have stopped, and then here, and then it's just pushed straight on through. But if we were to draw in some support and resistance areas, we could probably pick that these generally line up roughly with the Fibonacci expansion tool. So we can just scroll down, we'll look at another Fibonacci 161.8, and that's another area it could probably go down to. Let's just zoom out on a weekly time frame, and as you can see on a weekly time frame, it sort of matches up with these levels as well. So we can just slightly adjust them where we deem fit. There's no real science to it, but this just gives us an idea. So looking down here, we have the stochastic in the weekly in the oversold. So we could be getting a bounce higher from these levels. Because it's coming down to these major support areas, it's likely to bounce up higher. We also have the 200 moving day average, which is coming up, and it's coming up close to that, and it generally likes to have a bit of a bounce off that higher. So looking at these levels here, we could say to ourselves that it definitely has overextended, and it's likely we could have a reversal coming back higher at those levels there. If we were to jump down to 4-hour chart, and we still don't see any divergence yet, so it's likely that we could still be seeing a move lower, but it doesn't mean that we can't have a pullback higher. So if we would class this as wave 1, pull back for wave 2, all the way down for wave 3, we're going to likely see a pullback for wave 4 before one more move lower. However, now that we've reviewed the pound yen, let's just take a look at throwing on the dynamic support and resistance indicator to see how that sort of looks and matches up with our charts. So what I've done is I've now just put on the chart the Dsr indicator, and as you can see, it's automatically dropped in support and resistance areas. Now, support areas are generally indicated with a green, and resistance areas generally indicated with a red. However, we must remember that looking left, structured support becomes resistance. So where we have a support area on these green ones here, so if we just look at roughly where 3 of them line up, and as you can see, if I highlight them, you've got 3 support areas sort of lining up in this area. That also matched roughly where we indicated it would be the support area. And then again, if we were to just zoom out of the chart just a little bit more, and we look at the areas down here, we can see they're all matching up again. Again, they're all matching up the lows roughly where the area we expected to find support. So as you can see, the chart automatically drops the Dsr indicator in, giving you an idea where the support and resistance areas are. And this just helps you decide at a glance a likely place of where you might want to get out, or where the market might reverse or change direction. Let's jump across to the USD yen chart, and again, before we progress any further, we'll just go ahead and drop in our own support and resistance areas. And again, we're just looking left and identifying anywhere we think it might be, looking at a weekly chart, just seeing roughly where it might line up. You know, that might not be there, that might be somewhere a bit lower down there. Again, it doesn't really matter where it is. We just like to have a rough guess of where we believe the market might be. Now, as you can see, there are support and resistance areas around here as well. But if we just go ahead and drop on the DSR tool, it automatically will pick these up for us. So as you can see, I've dropped on the DSR tool now, and you can see it's automatically picked up these areas. So where it's indicating to have an idea of where the support and resistance will be, you can clearly see that the markets are reacting roughly where I assumed that would be. So the putting him in manually is just a lot of training, a lot of knowledge, and just getting a feel for the market. But if you're struggling in that area of identifying support and resistance, then this tool, the DSR tool from one of our affiliate partners, is definitely a recommended tool for you to consider using with your trading. If we were just looking at the USD yen, we could assume this is wave 1, back for wave 2, down for wave 3. So if we're in a wave 3 market and we do find some support here, we could look at pulling back higher for a wave 4. And as we have the stochastic in the oversold area on the daily chart, we could likely find some support here and a bounce higher, and the Dsr indicator has clearly identified this support area. So I hope you have enjoyed this video today, being the week 2 of 2016 Forex market review, and hopefully you weren't disappointed that we didn't look through the daily effects. You definitely can jump on that website and have a look through yourself, but I'm sure you'll be impressed on the affiliated partners Dsr indicator, the dynamic support and resistance indicator. Again, as discussed, jump on our website at www.saneinvestmentsolutions.com and click on the training course link, and then click on the Dsr indicator. I then encourage you to scroll down to the quick lesson guide, click on play, and it'll give you a quick overview of how to use the Dsr, how to load it on different time frames, and just a background of everything about it. And that way you get some confidence in this software and get a good feel, and the price is very, very reasonable. I want to take this opportunity to thank you for reviewing all my videos, and I wish you all the best to your success in 2016. Thank you.